Hey guys, for more like this, don't forget to hit the subscribe, the like button, and the notification bell. Okay, guys, it's Kevin Wadsworth and Patrick Curran, NorthStarBadCharts.com. Thanks for joining us today. And we've got our friend Chris Vermeulen with us at Tech Traders. How you doing, Chris? How are things with you?
I'm great. Thanks for having me on the show, guys.
It's a great time to be talking to you. It's all kicking off with precious metals at the moment. We've had some very exciting moves in the markets for precious metals fans, for gold, for silver. The miners, not quite so exciting so far. What are your views on? Go on, it's over to you now. We're here to talk to you. We want to hear what you have to say about precious metals. What do you got?
Oh, sure. All right. Well, let me share my screen. I'll give you a little taste of kind of the way I see things going right here. So if we take a look over at, let's take a look at gold first. We'll look at the monthly chart, and if we take a look at gold, the big picture of gold. I mean, when we zoom way back here, you look at gold. I mean, we're trading right back up near these big highs that we had. Each one of them was kind of news driven. We saw, gold take off, and we're pushing back up into this kind of this nosebleed section. And there's a huge disconnect, as you guys know, between what the price of gold is doing and what silver and the miners are doing. I mean, when you look at, I'll show you in just a minute here, but gold is testing these highs where silver miners and miners are trading like, way down. They're all down like 40-45%. From the highs. So to me, gold has got that global safe haven play, whereas when it comes to silver and miners, they to me are like the speculative play. And that's why I think they're underperforming. We've had a lot of selling. We had like a bear market in 2022, and that pulled gold miners down. And now they're rebounding. They're coming back to life, but they're nowhere near the highs where gold is. Where gold is every country, individuals around the world are slowly accumulating it. We've got banks falling apart. You could lose your money. And so we've got this news-driven move pushing gold up for the third time into this area. And the big question is this a breakout? Is it not a breakout? I still think we're going to be going into a stage 4 decline, which you and I we can talk about in a minute. I can show you some charts and cycles of how the markets tend to rotate. And I do think we'll see gold and miners pull back fairly substantially still. Right now, we're just having I think a kind of a stampede of everyone piling into gold and miners. Gold is testing these levels. I mean, I think we need to see it kind of break this high somewhere up around whatever this high was, this 2090 area. I think it's got to get somewhere above there and ideally hold above that on a weekly basis or even a monthly basis. This month is fresh. We're only 5 days in. We're getting very close to that level. So we have a lot of time for gold to push up, maybe even pierce up through 2100. But where does the month end? That'll be the big question. Is it going to be a long upper wick and it closes back down? And then we see things kind of fizzle out because the banking thing might kind of simmer down, which I think is a big chunk of why we're seeing gold and even Bitcoin kind of push higher here, is that alternate kind of currency. So let's take a look at gold miners real quick. If we look at gold miners on the monthly chart, and we'll just clean this chart up. You look at the high from when gold made that high. I mean, gold miners are down 49-50% still, and gold equivalent is trading right up here. It is. Gold miners are underperforming. We have a series of lower highs. We've got a series of lower lows. I do think, we've probably seen a pretty big base in terms of the miners trying to put this base in. It's kind of working its way up. This could be a big bull flag, big base kind of building, but I think it could continue to flounder for a lot longer than people think. This is a monthly chart. So this could still take another 6, 8, 12 months, maybe even longer to finish building this base. I think the stock market will eventually have a big pullback, a stage 4 decline, which is something we saw in 2008, something we saw back in 2000, 2001. These are major market resets. Gold miners usually don't survive. They get hit pretty hard. Gold will even correct potentially 20, 35% in that range as well. This time, maybe gold will hold up better because we have currencies actually, banks kind of falling apart, but we've already kind of had that in the past. So, when the masses are forced liquidation with margin calls, selling, I kind of have I'm not confident that this is like the move for gold. I think if it was, we would have seen gold miners do a whole lot better leading up to this phase, but really they are still way down in a basing zone. So that's kind of my take on the metals sector in terms of how they're there's that big disconnect. And I usually want to see gold miners leading the way, but they're really floundering, at this point.
What, Chris, so for the JDX, what level will you say, okay, the worst, like, is there a horizontal level you're looking at that's going to change the probabilities from less bearish to more bullish?
Yeah, let's zoom in on the daily chart here. I'm just going to get rid of a bunch of these lines. If we zoom back a bit, I mean, we've kind of already had a nice first kind of break of this level. So this is pretty significant. This was a pretty major high. So we're kind of having what I think is a little bit of a, I wouldn't say a short squeeze. I think it's more like a crowded play. Everybody sees this very clear standout high. And when we zoom in on this chart, it broke that. And then we've got a pop in volume in these past two green bars where everybody's like saying, oh, it's making a higher high, jumping in, they're chasing it, driving the price higher. So I feel like it's a little bit of a crowded play. I really think, I mean, it's a long way from where we are, but this is going to be a fairly significant level. This 41. I mean, there's a lot of different levels you can layer in here. So here's the problem. I'm focusing on longer term major cycles and trends, not so much the short term. So that's where I get a big kind of disconnect, because I know you guys focus sometimes a lot more on the short term action. So I run thegoldanoilguy.com. So that is a swing trading, momentum trading. And so we've caught these beautiful moves in gold, silver, miners, Bitcoin, because we're playing shorter term cycles. But from a more so an investor standpoint, which is kind of where my core focus is, I'm not really excited yet in miners. They're showing signs of life here, but I want to see gold break out. I want to see gold miners potentially, build a little bit more of a base up here. The fact that this rally has happened on news versus kind of real supply or real demand, I'm not a fan of any move that happens on news. I always tell this to subscribers. I'm like, if there's a huge pop intraday or for a week or a month and it's driven by news, we tend to see it fizzle right out. Gold did the same thing. We had war, it rallied right up and then it fizzled right out. And the banks starting to go under, potentially breaking, people losing money. It's just sent this big surge into gold, which then people start to jump on the leverage plays of gold, which are gold miners. So from a short-term standpoint, I mean, we've been bullish gold for several weeks in miners, simply playing much shorter term cycles. When it start to break some highs in these moving averages, we've had a nice run. So, I mean, we're still bullish and long in terms of the miners for short-term trading. But as a long-term investor, I'm waiting for a big stage 4 decline, a reset in the financial markets, which will hit miners and gold. And then from an investor standpoint, that is going to be the point where I think miners have those massive gains that we've seen, a decade ago, where miners can rally hundreds, if not thousands of %, and gold rallies 2,700, 3,500. I think that'll be the next major move, but we need to get this financial reset out of the way. And when there's a reset, it does, pull down on gold, silver in miners. So let me just show you a little bit of what I'm talking about in terms of this kind of stage 4 decline, just in case some people don't fully understand what I'm talking about here. More or less using Stan Weinstein's strategy, which if you haven't read his book, it's a great read. It's focused on 4 stages. There's stage 1, which is a basing pattern, which I shade as red simply because it's a volatile, choppy, no real direction in the market. It's a tough time to trade or invest. Stage 2 is green. It's a bull market phase, an accumulation phase. Stage 3, which is what we're at right now, is very volatile, very choppy. 1 month, one sector of stocks is doing really well, like precious metals. Another month, it's something else. It's all over the place and they fizzle out. They never really have big follow through rallies. So stage threes are very difficult and toppy. And then you've got a stage 4 decline, which is what I think we're going to come into later this year. And it could drag into next year or beyond, is a big decline. And it's colored green because whenever there's a big trend, it doesn't matter if it's up or down, we can profit from it. Falling markets fall about 5 to 7 times faster than the market rises. So there can be a lot of money made in a stage 4. So these are really good opportunities. And 2008 was a stage 4. 2000, 2001 bear market, that was a stage 4. We haven't had one of these in a long time. And a lot of people who are new into the markets have never even experienced a true bear market. Everyone's been talking about 2022 was a bear market. It was a tough year. I mean, it's a drop in the bucket. All that was, in my opinion, is this first downdraft, this kind of minor topping phase. The bull market has ended, but now we're going to go into the big reset. So I try not to get caught up in these really basic high level terms like, a golden cross where the 50-day crosses up through the 200-day, or stock market corrects 20%. It's technically a bear market. Those are all such basic high level things. They don't give you any insight. I don't find them very useful. I like to look at the stages, identify what stage any asset is in, and then you can figure out what strategy to trade or invest with it, or maybe just steer clear of it and go find something else. And so right now the stock market is in a stage, it's in a stage 3. And I think when we go into a stage 4, this is when we see gold. Last time we were here, gold was in a bull market like it is now, a super cycle to the upside. But within a major super cycle for gold on the upside, when there is a bear market in stocks like 2008, a stage 4 decline, it'll pull gold down. Gold fell 34%. Gold miners got hit pretty big as well. So that's what I'm waiting for, is this to kind of come through, reset. It's going to reset real estate pricing. It's going to reset a lot of different things. And then after that, gold and silver and the miners, I think, are going to become one of the leading sectors that start to rally first. And we saw that back in the early 2000s. We saw it again in 2009. Gold miners and gold were like the first ones to come, charging out of the gate. And that, to me, is going to be the ultimate opportunity for precious metal traders. Right now is a high risk opportunity, I think, in getting into those and messing around with them. It looks and feels like gold wants to break out, but all the other things just aren't in line yet for like that next big super cycle, to the upside. So that's kind of my take. And if we take a look at the kind of complacency or the market emotions, to me, we're in this complacency stage. We had like kind of the blow off with COVID. We saw all the ARK ETFs, spike up and then eventually break. And, energy or growth stocks topped out a long time ago. If you look at the way that the stock market has moved here, and we actually go and we take a look at the ARK ETF of how it moved, if we go back in time here, you can see it had a stage 1. We had COVID, everybody piled in, and then it went absolutely ballistic. It cracked to the downside, had this complacency stage where everybody thinks, oh, it's putting in a bottom, they're accumulating again, but then it goes into a full-on, bear market mode and breaks down. And this type of stock, these growth stocks, are the first ones to top out. And they topped out pretty much, it was like February, March of 2021. And I still think the ARK ETFs are going to end up in the teens by the time we're done, 15, 14, somewhere down in that range. And so these are the first ones to crack to the downside. And if we take a look at, let me just get this back here. If we go and take a look.
It's the same picture, Chris. It's exactly the same. You could have put ARK on your nice diagram there. It's the same chart.
I know it's crazy. And that's because ARK it's the perfect example, because literally it was kind of unknown, getting some traction, but then tens of millions of traders and investors came in with COVID who really, don't know what they're doing, emotional driven. They have FOMO. They think they're missing out on everything. They all pile in. They create this giant euphoric move. And then of course it cracks to the downside. And then of course they're, unfortunately most of them are still holding them, thinking they'll just hold for it to come back. But I mean, you need a huge recovery even from this level, to get back to break even or from the peak. I mean, 300%.
Yeah.
And what I find is interesting here, in terms of the cycles, is last year we saw energy stocks do very well. This year, precious metals are now really starting to pour the heat on. And I find precious metals are kind of one of the last, when they have a really strong push, outperforming the stock market, top of the hot list, which is the best performing sector. These are kind of the last, these commodity plays are typically the last ones. People move to physical assets because they're worried about the banks, they're worried about financing, they're worried about companies losing earnings. And we've seen both energy, precious metals have their spike. Precious metals are still in their strong mode. And then we go into the full-on the stage 4 decline. So this is where I think there's a big disconnect between what people are doing with their money and what I think is really happening is precious metals have got this strong rally. We've seen miners really take off. Everybody's getting really excited. But to me, the bigger the rally in miners right now, the closer and the uglier the stage 4 is going to be. We always see this. Precious metals and miners do very well just before the stock market goes off a cliff. So people are so excited and they're going to have so many dreams crushed if the market sells off and rolls over. I'm not saying it's going to, but people need to be prepared because we're at this nosebleed section. Economy, recession coming, everything just seems to be building up for this stage 4 decline. But we're in a complacency stage where people are piling into growth stocks again. We're seeing the NASDAQ do very well. But there's a huge disconnect. People are also piling into gold at the same time in miners. And we're seeing even real estate, a big rebound in real estate. And people who invest in real estate also generally invest in the stock market. And the housing market's going to get hit. So it's the same group of people. People think 2022 was the bear market. It's over. They think it's all up and to the right from here. But, I think things could get a lot uglier. And the nice thing about what you guys do and what I do, which is technical analysis, I mean, news is just noise, really. We follow price. Once something is turned around, it breaks out, it's confirmed an uptrend, we hop on and we trade it. It doesn't matter what the news is. We don't have to really worry about it. So if the stock market takes off or gold takes off and we get a new buy signal in any of those, we hop on and ride them. If they break down and sell off, we avoid the crash or we find a way to profit from, collapsing prices. And that's the sweet thing about technical analysis. We can throw all the news, everything out the window and really just focus on these key kind of charts here.
That's right. What about the, did you want to ask a question, Kevin? Or
just an observation, really, listening to all of that. You're probably aware of this, Chris. I mean, there's an event that has happened only 3 times in the last 100 years. And that event is SPX breaking down versus inflation at the same time as gold breaking out versus the S&P. It happened in 1930, it happened in 1969, and it happened in 2002. And when you plot SPX versus inflation and gold versus SPX now, that is just in the process of happening again. So we all know what happened with precious metals following 1930, 1969, and 2002. And it's just an observation, as I say. It's really interesting to see that event that's only happened 3 times in 100 years is unfolding on the chart in front of us right at the moment. So, it's just to add for people listening to this that, listening to Chris and listening to technical analysts and traders who are doing this really, really well is very, very important, because this could be, a once in a lifetime opportunity. These opportunities only really come along once or twice in a lifetime, where you get these major capital rotations. I mean, yes, there are opportunities all the time. I'm not trying to say that there aren't. Of course, there are opportunities, every week, every month, every year. But these huge capital rotations don't happen very often.
Yeah, for sure. And I mean, when I shared this in a video not too long ago, but when we saw gold start to break out of, let me just zoom back a bit more here. When we saw gold break out of this big basing formation through here, I shared it in an article, all the points where I had bought gold and silver and accumulated things all the way up here. And ideally, in a perfect world, I would love to see a stage 4 decline. I'd love to just see, selling hit and just drive, metals down, because I honestly believe that if we do get the stage 4 decline, gold's going to come back down to this level or potentially lower. And it's going to be something just like this. It's going to be like that screaming opportunity before we go boom, and we just see gold, silver, and miners take off. And I mean, we could just see gold take off as well without even correcting. I think we're in a very good situation for gold to just keep moving higher and rally. And I do feel like gold has the potential to actually be one of the better assets. I know it's expensive. Most people don't have a lot of gold. They have a ton of silver. Simply because silver is affordable, and there's a lot of talk about, you know, all the silver shorting and keeping the price down. But it's always the metal that you least expect to take off. Like it could be platinum or palladium too. We've seen some of those take off and do exceptionally well at other times. But gold to me is kind of the global reserve metal. It's much different than miners and silver, and it'll hold up the best. And for all we know, gold becomes the ultimate kind of metal, and it skyrockets and actually does better than, you know, potentially silver. I mean, silver is volatile. Usually it plays catch up at some point, but I think we'll see gold probably lead the charge and do well. And I think the key is really accumulating anywhere in this phase. Ideally, the lower the better. I think we're in the next super cycle to the upside in terms of even with the US dollar, the way the dollar's been going. We're kind of right back into this I think this major super cycle, whether it started right here and it's going to just eventually work up, and this type of correction or this pause here is really just kind of this type of move. So we've got lots of potential upside, and gold could break out and keep moving. I mean, the inflation is crazy. Gold should do very well. So we definitely have a unique situation with the inflation. So if you don't own physical gold, I mean, I'm a huge believer of owning gold because I think long-term, I think it's a great insurance plan. So I definitely, if gold takes off, I've already accumulated and got pretty much most of what I want. Really, if we get a pullback, all it is icing on the cake to just throw some more money at gold and silver on a pullback, because I do feel like whether it's this year or early next year, or potentially even this month, if we start to break out, it could be the start of the next major bull flag to the upside. So you definitely don't want to miss it. And yeah, I like physical metals. We're coming into a time where I think they could really shine again.
Also worth remembering, of course, Chris, that move in 2019 that took gold up from $1,400 to $2,000 or more, that $600 move 2019 onwards, that took place without gold breaking out versus the S&P and without the S&P breaking down versus inflation. So it did not have the major capital flows in its favor. And that's probably why we've suffered over 2.5 years of sideways correction, I think. But the real big moves really occur on those three occasions that I've just mentioned: 1930, 1969, and 2002. And that move in 2019 was not one of those occasions. It was just well, it certainly wasn't, you know, related to a major shift in capital flows. So, you know, that was a cup and handle forming, I suppose you could say. That's what it's resulted in anyway. But yeah, I mean that it's interesting, isn't it? It's going to be fascinating to see. I'm sure you're just as on the edge of your seat.
I'm so excited. I think we've all, anybody who's been through like one of the, like this huge gold rush, or even just from the 2008. I mean, if you're ever part of it and you bought any penny gold stocks, I mean, we've all been waiting for like this opportunity again. And I mean, you know, you look at 2000. It's kind of hard to see on this chart. Let me see if I can zoom this in a bit. We look at kind of 2000. I mean, we had the stock market go into a correction and go into a big bear market. And I mean, we saw stocks sell off and it pulled gold down, but there was a big pop up into that level. And I feel like we're going to see something similar to that again. If I just zoom out a bit, I think we're going to hopefully see something like that, where the stock market pulls back, we see gold pull back. Maybe gold holds up in this beautiful range. It just trades here with, you know, a stronger bull flag. Either way, I think it'll have a little bit of headwind, but you know, this area right here to me is, you know, this time where we're starting a new full-fledged super cycle, which is really exciting, and it'll be a time to definitely pile into that space.
Yeah, I think we're going to get our answers over the next few weeks, aren't we? And monthly closes are very important. And if we get a monthly close at the end of April that starts to give some further confirmation, then
Yeah.
yeah. Is there anything else you want to show us before we end the interview, Chris? Is there anything else on your mind at the moment that you want to get across to people listening?
Right. Yeah, sure. Yeah, there is. I think, to me, like, I follow the broad US stock market because I believe if you can figure out what the broad market is doing, then you can navigate other asset classes. So I kind of find if money is not flowing into stocks or flowing into stocks, you need to kind of invest one particular way. And I think just the big key here is to understand that we could be going into a big bear market, a real bear market. And if we take a look at the Russell 2000, it's kind of interesting because the price action that we've seen has been fairly bearish. Typically, I find small caps, transportation index can be a very good indicator of, those are not very straight lines, but we've got some more here. I know your lines are pristine. You guys have the best charts on the web for sure. But we've seen the Russell 2000 put in this huge topping phase. This is when ARK topped out. A lot of the small caps continued to hold up for a while, but they've stair-stepped their way down with a series of bear flags. This is another big bear flag. And the big disconnect here in the market right now is we've seen money pile into technology and like large cap tech stocks. And we've seen the NASDAQ more or less push up like this, and it's kind of flagging. Well, small caps have gone the exact opposite and have a bear flag. So, there's a big disconnect here. And if the small caps start to lead and start to break down again, that is not a very good sign. I mean, we're not seeing that many stocks perform very well. It's a handful of large caps, tech companies really holding the whole market up. Most stocks are in a very strong downtrend. They look really bearish. They're under all their key moving averages. All the long-term moving averages are sloping down. So the small caps give us a kind of a good idea of what's going on behind the scenes. It's just right now we're kind of masked by, the big heavyweights that really hold the market up. And people don't realize everything's kind of crumbling, to me at least, is crumbling behind the scenes. And the small cap is a pretty good idea of what's going on. And I think we could see a leg down. And this will be an early warning sign for the stock market. Small caps topped out well before the stock market really did. And they're breaking down. They'll probably break down first again. So it's just to understand that, we need to protect our capital. That's my focus right now. A stage 3 topping phase is when people shouldn't be looking to swing for the fences and try and catch all the big trades. It's more so step to the sidelines, protect your capital. And if you can protect it when the good opportunities come around that are low risk with tons of upside, that's when you can start putting real money, big money back to work. But this type of noise where, a couple months, one sector takes off, or a couple weeks, the sector takes off, and then 2 weeks later, it gives it all back. This is noise. It's an active traders market. I don't really get involved in that so much anymore. I'm just focusing on managing my own investment capital, and I just want to grow it as much as I can, but in a very conservative way. And this type of market is very tough. It's better to take small trades, fewer trades, and hang tight until we get into a stage 4 decline or a new bull market.
That Russell chart looks very ominous. Ominous? Is that the word?
Yeah.
Ominous.
Yeah, it's a terrible looking chart. That thing's people are sleeping on the wheel, Chris, right now. People, like, it's complacency. People are sleeping on the wheel. People are proud. Oh, I'm up 80% off bottoms, but you're down 77%. You need like you showed, we need 330% to break even, for crying out loud. What are people? Yeah. People are like, they're in La La Land.
I could go off on it, but like the traditional investing method of buy and hold and 60-40 and people doing buying into dividend stocks. I mean, the dividend ETF fell like 40-something% during COVID, fell more than the SP 500. And there's all kinds of reasons for that. The majority of the money is in people who are 50 plus. They all own the big caps. When they get scared, they all sell the same stocks. And people think that owning dividend stocks for that 4, 5, 6% dividend is is good. But if your stock falls 40 or 50%, like why do you hold on to something for 5% when it's going to lose 40, 30, 40%? There's just so many flaws with it. And the this time around could take a long time for the stock market to come back. I mean, we might be in a drawdown, or the last time we hit this, it took several years, 4 or 5 years, for the average portfolio to get back to break even. That's a long time if you're a retiree, if you're withdrawing money, especially if you're withdrawing it as the money's down. I mean, the sequence of returns loss is a killer for anyone in retirement. It'll make you run out of money early. That's the scariest part.
Well, it can take many, many years for the S&P to recover versus inflation, of course, and it's not unusual to have 10 to 20 years after a major stock market bear market, 10 to 20 years just to get back to where you started versus inflation. So people need to bear that in mind. Chris, you're doing very well ignoring the huge rumbles of thunder that I can hear in the background, by the way.
Oh, they are crazy. Everything's
That's what we're
shaking.
hearing. Wow.
I can hear the
thunder. Oh yeah, my house
is
shaking. Yeah, it's wild. We got a crazy storm.
A little bit like the financial markets are shaking at the moment, Chris. So it's adding that bit of atmosphere to the interview.
Right.
Before we go, Chris, just tell everybody where they can find you, where you are on Twitter, at the Tech Traders, isn't it? If you want to just let everybody know.
Yeah, sure. If you're an active trader, you like precious metals, Bitcoin, miners, the indexes. I mean, thegoldanoilguy.com is kind of a way to momentum trade, swing trade. My main core service for investors for growing large accounts money and protecting our capital during times like this is at thetechnicaltraders.com. And those are my 2 core strategies.
Good. I'm glad you said it, because I was calling it Tech Traders and it's Technical Traders. So that's me put right.
That's all right.
Okay. It's been brilliant talking to you, Chris. We always appreciate your views and your opinions.
Thanks, guys. Always a pleasure. It's always fun. All right.
All right, man. Thanks,
Take
Chris.
care, and hope the thunderstorm doesn't cause any damage.
No kidding. All right. See ya.
Bye-bye.